Welcome to a very special episode of Frontiers, where we talk about the latest trends in technology, innovation, corporate sustainability, and the financing mechanisms that support them. I'm Kat Hunt, and I'm thrilled to introduce a sustainability leader that needs no introduction, Michael Kobori. He spent nearly 2 decades at Levi Strauss leading sustainability and the last 5 years as chief sustainability officer at Starbucks. He is now advising individuals, organizations, and companies on their sustainability journeys. We're going to be talking today about the creative financing mechanisms that Michael helps support to see corporate sustainability strategies come to life. On a personal note, I was able to meet Michael early in my career when I was looking to transition into sustainability. And while we've recently been able to reconnect, which has been lovely for me, I credit him as one of the reasons I'm on this path today. So, super special to have you here today, Michael. Thanks so much for joining.
Kat, thanks so much. It's so great to be here, and thanks for having me on your podcast. Yeah, as you know, I'm very passionate about sustainable finance. I think it's critical for all of us as sustainability leaders to be able to mobilize large amounts of capital as you do in support of the work that we are doing and not be constrained by just those, corporate budgets or operational budgets that we have. So looking forward to our conversation today.
Yeah, thank you. We've talked about briefly how you started your career. I'm going to start at the beginning before we get into the creative finance itself. You didn't start your career in finance. You started your career in nonprofit and really joined the for-profit world when you joined Levi's. What was that like? Because we've also talked about the fact that finance can be an intimidating topic to those that didn't grow up in it professionally.
Absolutely. I started my career actually doing international development work at the Asia Foundation. I worked there for 9 years, and we were very focused on human rights and economic development. I lived and worked in Asia for a number of years as part of that role. And of course, we ended up managing large multi-million dollar budgets, but it was not really with the purpose of mobilizing large amounts of capital like we're able to do today. So it was definitely a transition moving into the corporate world of corporate finance. And I was definitely intimidated. You mentioned that. I was definitely intimidated. Yeah.
Whether you're a finance expert today or not, even to kind of play in the arena of financing, I think takes confidence in finance to some degree. So what did you do in that role to build your confidence in it?
As I think about it, I would have to say, I mean, number one, it was after a number of years at Levi Strauss and Company, I ended up leading the supply chain labor standards program. So all of the factories around the world. And as part of that work, I became part of the supply chain leadership team. And so I was sitting around the table with the head of supply chain finance and all of our sourcing people and logistics folks. And so I really began to get immersed in the language of business and the issues that the supply chain leadership team faced. So that was a huge education, and it really got me up to speed on the various business issues that you face in a supply chain. So that was critical to just understanding what those concerns and issues were. I think in terms of getting more comfortable with finance, I did a couple of things. I really tried to spend more time with our finance team and not just the supply chain finance VP, but our tax folks, our controller's office, other people in the finance function, just to get to know them, walk by their office, check in, how you doing? What are you working on? That kind of thing. And I ended up also, I took a course on sustainable finance at Oxford University a number of years ago. It was led by a professor there named Ben Caldecott, who's one of the pioneers in the whole field of sustainable finance. And it was a week-long course, and I learned a tremendous amount there. And I also made really interesting contacts. There weren't too many corporates. There are actually a lot of central bankers going to that program.
It's helpful too, to your point, not only being immersed in the language with the roles you're in, but just building comfortable relationships because you can feel a lot more comfortable asking questions that you might not otherwise too. So at Levi's, I want to jump into one of my favorite of your financing mechanisms that you've been behind is in partnership with the World Bank and the IFC. A lot of people I don't think realize that Levi Strauss in 2014 worked with them on a supply chain finance program, which really serves as a blueprint for a lot of the programs we see from commercial banks today, like the Sustainable Supply Chain Program that Walmart and HSBC have initiated. I think when I'm trying to explain early payment programs in supply chain, it is one of the more complex types of financing mechanisms. So, would love to hear kind of the story of how that came about for you.
I will say that part of my answer actually is a response to your earlier question, how do you build the relationships with the finance people? And I remember I was intimidated by our finance VP in the supply chain. He was there at the leadership team with me and he knew all about finance. He would always talk about the numbers and everything. And I was really trying hard to understand. And he was kind of a gruff type of guy anyway. But I worked and worked and I knew because I had made presentations about labor standards and sustainability. And I mean, the folks in the leadership team understood it and they knew it was really important for the company. But I needed to go to a different level with him, to really build that relationship. And one time, as a leadership team, we were in China. We were actually in Beijing as a leadership team, and we had an extra day. And so there was an opportunity for some of us to go to visit the Great Wall of China. And I had never been. He had never been, and his wife was there. And so the three of us ended up going to visit the Great Wall. And so we're there walking on the Great Wall, and we're getting to know each other and our interest in Chinese history and things like that. And that's really how we got better acquainted, and we began to develop a much more personal relationship just on the Great Wall. And out of that conversation, I started learning about now to your question about the supplier financing programs, right? He started sharing to me what was going on with the suppliers because I asked him because the suppliers were the ones that we had to have that had to have labor standards. And he said, "Well, yeah, Michael, and it's hard because we ask them to do labor standards, but they have these payment issues." And I said, "What do you mean, Walter?" And he said, "Well," and he had to explain it to me in just layperson's terms, right? He said, "The suppliers have to purchase the raw materials to make our products." And I said, "Yeah, I get that." And he said, "Yeah, they got to purchase, the fabric and the sundries, we call them, the zippers and the rivets and the buttons and the thread and all of that." And I said, "Okay." And he said, "Well, they have to lay out the money, then they use that raw materials, they sew the product and they ship it to us and we get it. And then we don't pay them for 60 days." And I said, "Really?" And he said, "Yeah, we don't pay them for 60 days. So all that time, they have cash flow issues." And I said, "Oh, I understand." And so he said, "And the other thing is, we actually want to extend the payment terms from 60 days to even 90 days because we want to conserve our cash too, right?" So that puts the suppliers in a real bind. And I said, that's really interesting. I told him at that point that I'd been talking with the folks at the International Finance Corporation, the IFC, which is the private sector arm of the World Bank, and that they had introduced me to this program where when suppliers have these kinds of short-term cash flow issues, the IFC can provide the payment to the supplier immediately. As soon as they ship to Levi's, the IFC can provide them with the loan. And that was great because the suppliers, that's what they wanted. They want immediate payment.
Hmm.
And Walter said, "Oh, that sounds pretty interesting." And I said, "Yes." And he said, "Well, what's the catch?" I said, "Well, there's no catch, Walter. We will pay back the IFC in whatever time period we want. So if we have 90-day payment terms, we can pay them back within 90 days, and they're fine with that because they know Levi's is going to be good for the payment." And the other thing that we had been talking about was, the IFC was interested, of course, in impact because they're part of the World Bank. They want impact. So they wanted the suppliers to improve their human rights and environmental programs. And so we figured out that the IFC could offer the suppliers the interest rate that Levi's paid because they had the relationship with Levi's. And so that interest rate, of course, is much lower than the suppliers could get on the open market. So we indexed the interest rate to supplier progress on our labor standards. The better the supplier did on our labor standards, then the less interest they had to pay. Now, suppliers loved that because they saved money
Hmm.
and they had to do the labor standards anyway. We loved it because we got better labor compliance, and the IFC loved it because they got impact. So that is how the program was born. And I mean, it actually took off. Levi's ended up using about $300 million worth of IFC cash for these payment programs. So
Wow.
that was significant with probably, it wasn't all the suppliers, but it was suppliers that represented about 40% of our total volume. So it was significant. The program at Levi's has continued to grow. I think it's now probably approximately $1 billion worth of cash that Levi's is utilizing. And I think the total program that the IFC has, not only with Levi's, but with other multinational companies, is approaching $3 billion. Now, not all of those programs are linked to human rights. Some of them are linked to environmental performance. Some of them are just straight payments to the suppliers, but it has grown quite significantly.
What's unique about that too is, I mean, it sounds like a confluence of really amazing factors at once, and obviously being able to utilize this for something that's kind of more where business needed to go in terms of compliance. And when we look at what you've done at Starbucks, it really, I think, pushes the needle into innovation too, which I'd argue is a harder business case to make. It's a little bit riskier of an investment type. But what's similar across all of these mechanisms is their balance sheet mechanisms, right? So you're utilizing cash in the cash account, and either you're hopefully seeing maybe a similar rate of return to the cash account. For simplicity, there's lots of ways to invest that cash, but for the sake of this conversation, or you're getting a better rate of return, or there's some strategic implication as to why you'd be using that cash for different purposes. I'd love to hear about how that evolved into some of your other finance mechanisms that you saw at Starbucks.
Yes. When I went to Starbucks in 2020, I had the great advantage that the company had already been a pioneer, as I'm sure you know, in sustainable finance. Starbucks issued the first green bond, $500 million back in 2016, and that was primarily used to support the sustainable coffee program that the company had been running for, at that time, about 15 years. So it enabled that program to expand. And then shortly after I got there in 2020, actually it was 2019, just before I got there, they issued a $1 billion green bond that continued to support not only the sustainable coffee program, but also was expanded to support what the company calls the Greener Stores program. So it is to support the construction and operation of stores that are more sustainable, that use 20% less energy and water. So the green bond program was well in place, and the treasurer who ran these programs and managed the balance sheet was very supportive of sustainability and the use of the balance sheet in this way.
A couple of them in particular that have come to mind for me are especially representing equity and debt, because I think Starbucks has done a really great job of leveraging many different kinds of mechanisms. And sometimes it feels like there's not a lot of method to the madness generally in the finance world of like, why would you use this instrument for that investment? But there really is. And I think there's great example of that in your work at Starbucks while you were there. The Valor Siren Ventures was equity for much more kind of high risk new innovation, if I understand correctly. And some things like the Water Equity Fund was really a debt instrument for maybe more mature solutions that supply chain players would understand how to implement. And there was a return, a payback period that could be expected for those loans.
Correct. And I would say the bulk of the investments that we made were the latter. So they were like the Water Equity Fund, and I'll share a little bit about that. The company had been working for a number of years with water.org, which is a nonprofit founded by Matt Damon and somebody who knows a lot about water. And they were charity, right? So they got donations to support water projects around the world. And probably about 5 years ago, they connected with some finance people who realized actually we can create a fund that provides these microloans to communities, individuals in developing countries for water access, sanitation, and hygiene programs. And they realized they could monetize that. The loans get paid back with some interest. It's not market rate interest, but it's fairly decent interest. And they approached us with that. And we sat down with our treasurer and we reviewed it. We sat down with the teams and we reviewed it and found out that, yep, this will work. And so we ended up being the anchor investor in the fund with $25 million from our balance sheet. And then we went around with the water equity folks to a number of other companies and said, hey, we're going to do this. Do you want to put some finance into this as well? In the end, we were able to get $120 million mobilized into the fund from big companies, Microsoft, Gap, Reckitt, DuPont, Ecolab, all put into the fund, and the U.S. Development Finance Corporation did as well. So the fund's up and running, and they're making the loans, and it's working. And that's an example of the kind of fund that we were able to set up. And then I was meeting actually about a year and a half ago at Climate Week with folks from something that EDF had set up, which was called the Dairy Methane Action Alliance. And they had gotten Starbucks and Danone and Lactalis and other companies that have dairy suppliers together to reduce methane because, as I'm sure you know, cows produce methane through their manure as well as through the burping, right? And so methane is one of the most potent greenhouse gases. So all the companies had gotten together with EDF and we're exploring ways to reduce methane. So I said, well, EDF, do you know about this fund that was set up by Water Equity to support similar projects on water? Why don't you talk to them? So I connected them, and now EDF has set up a similar fund for Methane Action Alliance.
Wow. And debt in that way is inherently lower risk and a bit more appetizing, especially in the corporate world,
Yes.
I imagine.
You asked about Valor, right? And the
Oh, yeah.
innovation. Did you want to hear about that
Yeah, I'd
too?
love to hear about that one too.
Yeah. So Valor Siren Ventures, of course, is a different kind of animal, right? We're not getting market rate payback on those funds, but it's high single digits. And actually, the second round of the Water Equity Fund is double-digit returns now, and they're investing in water infrastructure projects. So that work is going extremely well. On the equity side, this was just before I joined the company. Kevin Johnson, who was the CEO at the time, had a real innovation agenda. He believed the company wasn't innovating enough. And so he did a couple things. One is he set up a big innovation center at headquarters called the Trier Center to try things, right? And so he set up a mock up of a store and we'd test all of the new equipment and the new processes. And it was set up just like a Starbucks store. And it was staffed by actual baristas who could tell us and give us feedback on what worked, what didn't. The other thing that he wanted to do, and this was quite common for companies at the time because there was a lot of interest in the VC world and in venture capital. And there was a lot of cash floating around at that time, unlike today. And so he had talked to some friends of his at Valor, which is a big VC firm. And he said, well, can you do something at the startup level to support those startups that will help us on consumer engagement and on the products that we have and target those kinds of startups. So Kevin invested $100 million in that and got Starbucks business partners, Target, for example, right, which operates all the Starbucks and Target stores under a licensing agreement. So Target invested, and some of our business partners that operate Starbucks in other countries internationally also invested. So it became a $400 million VC fund. And it was managed by a group from Valor because we didn't have the expertise to be VC investors. And they went out and they started investing in these small startups, some interesting ones. GoPuff, which is a digital convenience delivery service, which took off. There was an EV charging company. Speaking of methane and cows, there was a company that was developing red seaweed as a feed additive for the cows that would get them to burp less methane. So there were a lot of different companies like this that we invested in. And I would say the VC fund is successful. A number of those companies had exits and it's doing well. And so after a couple of years, there was a second fund established, and the second fund actually focused more on sustainability because when we were doing the analysis, we realized that the first fund investments had focused probably about 70% of them were focused on companies with some sustainable aspect to them, like the red seaweed startup that was helping us reduce methane emissions from cows. So then the second fund was more targeted towards companies in our food and beverage retail space that were focused on sustainability.
And did the investments within that fund tailor to all of the different organizations that had invested in it? Or would they take your portion and kind of specifically invest it in solutions that you'd be more interested in as Starbucks versus another investor?
Well, all of the investors were from the food and beverage retail space. And so all of the startups were of interest to everybody. Now, the different investors, say Target or others, they would look and see which ones they were most interested in and then get involved in those if it was appropriate. I would say the other benefit, in addition to bringing the innovation to Starbucks, the other benefit of setting up that fund, the investment fund, was it really brought our leaders in to have direct exposure to the startup world. Kevin set up something called the Starbucks Innovation Council, which was the senior people, senior VPs from supply chain, from product, from retail operations, from the different international regional business units. And that Innovation Council met every quarter and took a look and reviewed, oh, here's the different startups that are coming on the plate that are interesting. And then if they were of applicability and real interest, then say supply chain would bring in a test or a pilot with that startup and really tell them, okay, here's what we need. And it was challenging at first because these startups, right? And for Starbucks to use anything, it needs massive scale, right? It has 40, we have 40,000 stores, right? Around the world. So Starbucks needs massive scale and reliability and cost. And obviously, startups aren't going to be able to deliver that. But just providing that perspective to the startups, getting them to see what we needed and work on that, that was extremely helpful to them.
Hmm. We've talked a lot about in previous episodes around different languages that the corporate and the startup speak. And so I love that a great example of just that exposure lessens that barrier of different languages. And just as
Yes,
the startup needs to understand what the corporate needs, the corporation needs to understand that the startup just can't scale overnight, right? It's going to take a
correct.
and that there's an education kind of going both
Yes,
directions there.
absolutely.
A theme I see in all of these examples, and really maybe core to how you've worked, is creative partnership. So, whether it's the architect of the mechanism being the World Bank and the IFC, or the fund manager, the different competitors or supply chain partners you've brought to the table, and then internal partnerships too, right? How you've become more comfortable in different areas and gained different skills and specializations. I always like to think of partnership as increasing feasibility. Many hands make light work. It allows us to bring more expertise to the table. A lot of times, these investments require a certain threshold of funding to even make an impact. So we have to get more funding to the table. Though a lot of times, partnership feels like less feasibility because there's a lot of alignment and stakeholder management and just time that can kind of drag on. So I'm curious how you've thought about partnership as you've navigated some of these decisions and strategies as they unfold.
It's a good question, and I guess I would say I always viewed my role as the head of sustainability, whether it was at Starbucks or at Levi's, as someone who was trying to use sustainability to bring more business value to the company. And so partnerships were a necessity because I didn't run any part of the business. And so the very nature of the work requires you as the leader of sustainability to understand what the company is trying to deliver, right? Whether it's a great fitting pair of jeans, whether it's a amazing cup of coffee delivered quickly and with a smile in a third place, right? And so it's very important for us as sustainability leaders to understand what we're trying to deliver as a business and then how can sustainability enhance that. And once you have that mindset, then you can be very empathetic or understanding of, oh, here's what my product partners are trying to deliver. Here's what my retail partners are trying to deliver. And you really got to put on their mindset, their hat, and then figure out, okay, what can I do that will help them? One example is recently, about a year ago, when the current CEO, Brian Nickel, came on board, and one of the things he wanted to do was to deliver a little bit of price relief to the customer since he believed there was an impression that Starbucks pricing was too high. And he went right to the head of product and said, "Hey, what can I do here?" Well, it just so happened that she and I had been talking about the upcharge that Starbucks made on alt milks, on oat milk and soy milk and so forth. We charged a little bit extra because the costs were higher for us, right? She said, Michael, I totally agree with you. If we can eliminate that upcharge, it'll be great because then there's no price differential between a more sustainable alternative and dairy, number one, and our customers will like that. And number two, I'm going to have to eliminate that upcharge anyway at a certain point, right? Because the world is going to force us to. It'll want price parity. So I'd rather do it now while it's a smaller hit than later when it's going to be even a bigger hit to us. And so when he asked her, she said, "Hey, Brian, here's what we can do. Let's do this. It'll give price relief. It'll get us some wins on the sustainability side. It'll be more sustainable for our business." And I'm sure you know that's what he did. It was one of the first actions that he took.
Yeah, it's still one of the only coffee shops out there that it's not an extra 150 for oat milk, which I appreciate.
Well, once we did it, Pete's followed suit almost immediately.
Well, it needs to get to more of the Portland small coffee shops, I
Yeah.
guess. Well, I'd love to be able to do this again. I know we have to wrap up here soon. It's been fascinating to be able to talk through these examples. Let's leave with one piece of advice you'd leave for corporate sustainability practitioners while they're trying to figure out how to finance their sustainability strategies.
I would go back to where we started. And one piece of advice to all of you out there who might be watching this, if you're a sustainability leader, don't be afraid of finance. I think generally sustainability people don't understand finance and finance people don't understand sustainability, right? And so it's our job to really understand and be that bridge. So do all you can to understand finance better, to get to know your finance partners. I'm not saying you got to go walk on the Great Wall of China with them, but you've got your own ways to build that relationship. And then don't be afraid of big numbers. I used to be afraid, right? I used to say, oh, $1 million is a lot of money. What are we going to do with that? How are we going to reduce that in our budget? No, no, no. We have to think in $100 million, in $500 million. It's just another tool in our toolbox. That's all it is, because that's what it is to finance folks. Okay, we got to remember. So don't be afraid of big numbers. We got to get those big numbers and apply them to the sustainability work that we're doing.
Yeah, that's when the results happen. Well, thank you so much, Michael. It's been so lovely to have you here.
You too, and thank you. It's been great talking with you.